So some time has passed by and we're gonna enter a trade over here on the euro dollar.
Order filled.
We're gonna enter right there. And we're gonna have a tight stop to 972. Let me set my stop to 972.
Order submitted.
I'm gonna have a tight stop right here. So we are entering the euro dollar upon the exhaustion of the play. As you can see, the euro dollar has been trending downwards for quite a significant amount of time, and I'm entering into the exhaustion of it to the upside. It has finally break above the 13 EMA. Here you can see on the trend it hasn't broke above the 13 EMA, and it finally did, and it's picking up steam. The RSI is climbing up. The RSI is above 50, and we also have the MACD right here, the MACD crossing above its signal line, indicating that it's going bullish momentum. So we're going to be doing a 1.2 risk reward ratio, and my take profit's going to be at 979. 979 is going to be my take profit.
Order submitted.
So, and now we wait, and now we wait. So as I said before, there's three setups that I enter. I enter the 1348 cross, I wait for the cross to happen, then I enter on the next candle so I can get confirmed. Or I enter in an A setup. For example, this is an A setup right here that I could have took, but I wasn't confident because there wasn't enough volume. Since we are trading aftermarket at nighttime, it moves very slow, like a turtle, So I don't really recommend trading in the aftermarket hours. It's so slow. But this is an example of an A setup right here. Price action hit the 13 EMA, which is the blue line, and it bounced. That's an A setup. That's what I call an A setup because we're continuing on the trend. So on the bounce from the price action here all the way down, that's a good 101, 102 depending on your stops. But that's an A setup. 1348 cross, for example, it would be right here. This is the 1348 cross. So the cross happened in this candle, so theoretically I would have waited to the next candle to confirm the cross and then ride the momentum down. So those are the three setups that I take: 1348 cross, or A setup playing the EMA bounce, or an exhaustion of the play, which what I look for is for the EMAs to be very overextended, RSI very oversold, and that's what I call an exhaustion play. So after it's been trending down or up for quite some time, the EMAs have separation, or in this case it's oversold. I wait for a break of an EMA, RSI trending up, and MACD right here crossing up. That's what I look for. So, two more ticks and I get my 1.2 risk reward ratio, but it finally broke over the 24 EMA, which is the green one. And now price action is hitting the 48 EMA, and the 48 EMA is also a barrier. All these EMAs, they're like barriers in a sense. So price action can always bounce from the EMAs. So just something to take note of. So you can see, look how slow after hours move. It moves very, very, very slow. Very slow. Look how there is sensitivity to the 48 EMA. Price action candle hit the 48 EMA, which is the yellow line, and you can see some rejection towards it. So that's why I was saying that the EMAs, they're like barriers. Price action could bounces off of it. So, you know, in any given moment, price can bounce from the 48 and continue playing to the downside. That could happen to me. But that's why I have a tight stop. That's why I have a tight stop. So I just want a 1.2 and keep stacking the odds in my favor. Eventually I'll get into a different trading strategy when I pass my evaluations account, but I just want steady momentum until I pass my evaluation account. Then after I pass my evaluation account, of course I have to grow my account over 26,500 and keep on going, and then implement another strategy. But for now, we're only doing 1.2 risk to reward ratios. That's all we're doing. That's all we're doing. So this level right here, this range, this rectangle box, that's a support level. It doesn't have to be exactly it, but it has to be somewhat in the range that you make this, you know, this support level. Price clearly got supported in this level. It went down a little bit from my my rectangle, but eventually climbed back up, being supported. So exactly like over here, price came down all the way over here to the support level. It went down just a bit, but eventually it retook it. Came back here, got supported again, came back up, came back here. Looks like it's getting supported and it's climbing back up. So this is a significant support level, which is where I plot it. And right here, this is a resistance level over here. And this zone right there, that's a resistance level. That's a pretty nice from here to here. That's a pretty decent move, but for now, just 1.2. That's all I'm looking for. Just looking for 979. A small move. I'm taking it. We're in here for the long haul. That's what we're in here for trading. We're in here to make this a career, a long haul. I'm not trying to look for huge, big trades. I'm not looking for that. I'm just looking for significant movement to the upside. I don't want big swings in my portfolio. Like I get a big P&L one day and then the next day I lose it all. No. So this is exactly what I said. Look how the 48 EMA is acting like a barrier. The price action is being rejected by the 48 EMA. This could easily, you know, bounce off the 48 EMA and continue down. It could happen. But that's why risk management is key, and we have a tight stop at 972. And if it hits my stop, oh well, we just let it go. We just let it go. But for now, just have confidence in the move. Have confidence in the move. The MACD is still trending up. RSI is still trending up. We're still good. We are still good. Like I said before, after hours moves like a turtle, and I don't really recommend trading after hours. I really don't. You shouldn't do it at all. But I'm doing it because I have nothing better to do. I have nothing better to do. And like this is just me practicing my trading pretty much. Just practicing consistency. That's what I'm doing. So 2 ticks away. We just gotta keep waiting. Gotta keep waiting. But look at the EMAs. Look how they're diverting from down, converting to go up to the upside. Show you another example. The EMAs they ride with the price action. Look how the EMAs point down. Then as soon as price action starts going up, EMAs start curling up. So I'm just riding the waves, baby. That's what I'm doing, riding the waves. So that is my strategy. EMAs using the 13, 24, 48, 200 EMAs, RSI, MACD, riding waves. That's what I'm doing, riding waves. We're about 1 tick away. It might not get filled. It might not get filled because of the volume. It might not get filled. That does happen sometimes. It'll reach your take profit and you won't get a fill. Sometimes that happens. Look at that. It's being rejected by the 48 EMA. See, I told you. Look. Look. This is the candle wick. Candle wick. It's having some resistance on that 48 EMA, but it's okay. We're still trusting the play. MACD still up. RSI still coming up. 1324 EMA still going up. We're good, baby. We're still good. Have faith in your strategy. Have faith in your strategy. Should I move my take profit to 81, just underneath that resistance level, to profit a little bit more? I don't know. I feel good today. Feel good today. Should I do it? Nah, I shouldn't do it. I'm gonna stick to my plan. See? See? This is what happens. Oh, I want to make more money. Let's move our take profit up. So we'll just stick to our plan. Just get my 1.2 and we're out. You know, we're up 90 bucks on a day. You know, I mean, just imagine that's like $10 an hour working 9 hours. So imagine. Imagine. I mean, I would take that. Like, that's like a quick 100 bucks in a span of like 15-20 minutes. I mean, who wouldn't take that? So it's got to be grateful for this type of money. Price got rejected again by the 48 EMA. Look how the new candle just formed, and it didn't form above the 48 EMA. So there is a significance of a barrier on that 48 EMA. Price action is getting rejected by that EMA. It could curl back down. That's why I have a tight stop. That's why I have a tight stop. But since prices keep going up, I should move my stop up just a bit. I should move my stop up a tick because we're following the play. So even if it comes back down, I lose a little bit less money. But as the play develops going up, I'll gradually move my stop. Gradually move my stop. So now it's no longer a 1.2 because since I move my stop, now it's a 1.3 risk reward ratio. So we're almost there. This has been 5, 10, 15, 20 minutes. The slowest 20 minutes ever, dude. Ever. Just to hit one more tick. Just to hit one more tick.
Order filled.
There you go. There you go. I'm done for the night.
Order canceled.
I'm done for the night. I'm done for the night. You saw it here. You got this shit live, bro. Live. 1.2 risk reward ratio. And just keep stacking my wins. Keep stacking my wins. Keep stacking my wins. Keep stacking my wins. Small incremental wins. Even if it takes me a little while to pass these evaluations accounts, it's good practice. So I'm snowballing my little snowballs into one big snowball. So that's what I'm doing. So I hope this presentation of the Apex accounts helped. So the play that I did is an exhaustion play. EMA's lots of separation. It's been trending down for a while. RSI has been below 30 for a while, and then at the break of the 13 I entered. RSI coming up, MACD coming up, and bada bing bada boom, paint the picture. We good. All right, see you guys next time for part 3. But before I go, let's look at my accounts. So these are my accounts now. And how much did I make today? 20, 40, 60, 80, 100, 120, 140, 160, 170, 180 bucks, just like that in 20 minutes. Who doesn't want that? And that's exactly why I want 20 accounts. But for now, we're doing the 10. But that is all, folks. This concludes my passing my 25K funding challenge part 2.